Dow slipped 0.14%, Russell pulled down 0.19%, while the S&P crept up 0.02%, and the Nasdaq added 0.33%, marking a sixth straight record close for both. But I wouldn't get faked out. Breadth was weak. Equal weight S&P underperformed by nearly 60 basis points, and both the NYSE and Nasdaq posted negative breadth over 1.5 to 1. Leadership rotated again. Semis, energies, airlines, autos, discounters, and cosmetics saw strength, but defensive names got hit. Big tech held up, but momentum in retail favorites took a breather. In macro news, the Dallas Fed Manufacturing Index surprised to the upside, with commentary showing cautious optimism. But tariffs remain a pain point. Treasury auctions were mixed, strong 2-year, but a weak 5-year. That followed news Treasury plans to borrow over $1 trillion this quarter, up from $554 billion. Yields ticked up across the curve. The 10-year closed at 4.41%, 30-year at 4.96%, and the dollar surged 1%, driven by euro weakness. Gold dropped 0.56%, and the oil jumped 2.96% on tightening supply expectations. Earnings were light. RVTY missed and cut guidance, dragging diagnostics lower. This week's main macro driver is really trade policy, with markets watching for last-minute deals ahead of the August 1st tariff implementation deadline. That includes the US-EU deal already signed, and eyes now on a 90-day extension with China as officials continue talks in Stockholm. Beyond that, Fed policy, AI earnings, and inflation data can be all big catalysts. Forward guidance and AI capex trends will be the focus of this week's earnings, especially from the Mag 7 names. And with macro data coming in heavy, the market is walking a fine line between resilient growth and tightening liquidity. What's coming up this week? Tuesday, JOLTS, consumer confidence, Case-Shiller, and FA home prices. Wednesday, FOMC decision, Q2 GDP, first read, ADP payrolls, pending homes. Thursday, PCE inflation, personal spending and income employment cost index. Friday, July jobs reports, ISM manufacturing, construction spending, and Michigan sentiment. And lest not we forget, Microsoft and Meta report Wednesday after the bell. Apple and Amazon follow on Thursday. That's nearly 40% of the S&P 500 market cap reporting in 2 days. This is less of a calm stretch and more of a pressure set. The index is still climbing, but underlying participation is narrowing and rate pressures are rising. With the Fed likely holding its fire, this week's data and earnings could dictate direction. So stay disciplined, stay focused, stay profitable. I'll see you tomorrow morning. God bless.